Well, look, I think what we're seeing across a lot of the internet sector right now is valuations that have come down and been compressed because of fears of recession, fears of more macro headwinds. And broadly across the group, we're fairly bullish to buy into that fear. We titled our initiation report the famous Warren Buffett quote about be greedy when others are fearful. For Amazon as our top pick, obviously a lead out and near term here in the next few quarters still may be a little bit choppy in the e-commerce market, but we think that by the time we're crossing into the back half of next year and exiting through holiday season, we're going to see Amazon beginning to take share again in the e-commerce space and going to allow those higher margin businesses like cloud, like advertising to start to shine through and allow operating leverage to flow through in that stock, especially after so much investment that they've done in fulfillment and logistics that goes back even pre-pandemic to when they were investing in one-day shipping. We think it's time for that investment to start to pay off.
You like a number of the FANG names for similar reasons. I think Google you see as an opportunity, like Meta, Snap, not a FANG, but certainly one of the high-flying tech names that collapsed in the last year. Yeah. And I get the valuation argument, Dan, but what about the macro? What about risks around higher interest rates? We just got a message from the Fed 2 hours ago that their work is not done. They're not planning rate cuts in 23, and they're worried about easing financial conditions. All of that is bad for these stocks, isn't it?
It is, and it all comes back to sort of what are we baking in the market? And look, if there's a big incremental step down, it's maybe a little less interest rate driven for me with those names that you mentioned, Google and Meta and Snap, which are all pretty much primarily advertising driven. We're really interested in the GDP forecast, where unemployment goes and where ultimately consumer spending goes. You're right. I mean, right now is the fearful point. We think that investors are very concerned with what's coming. When you look back in history, you tend to find that these are the sort of moments where building longer term positions, and that's really what we emphasized here. We're making a big call just yet on the quarter or anything along those lines. But if you're looking on a 12 to 18 month view, we do think that this point of sort of maximum fear is when you want to start building those positions.
There you go. There's the bull case. Dan, thank you. Daniel Salmon, New Street Research. Appreciate it.